Good afternoon. Today is Tuesday, June the 13th. The time right now in Singapore is 1:29 in the afternoon. And overnight, the market has been pretty quiet, although equity markets has actually drifted a little bit higher ahead of tonight's CPI numbers coming out from the States. And of course, today, beside the CPI coming out from the States, we have later on, we have the UK labor numbers that will be released, including the unemployment rate. We are also going to be hearing from Germany regarding their inflation data in the harmonized index of consumer prices. So today we are heavily depending on inflation numbers, and the market has been going up ahead of this number. And of course, tomorrow, the day after, we have the FOMC meeting, and today's is the beginning of a two-day meeting between among members or governors of the Federal Reserve who are going to decide whether or not they're going to pause or continue to hike interest rates going forward. Last week, we have the Reserve Bank of Australia surprising the market by hiking interest rate by another 25 basis point to 4.1%. So have the Bank of Canada after a period of pause. So we can see that central banks are again driving back the interest rate hikes because of resurgent inflation. So tonight's CPI number is going to be crucial because if the inflation number come in hotter than expected, then of course the Federal Reserve may not be able to pause going forward. So the market has been uh, forecasting that the Federal Reserve will pause. So that's why equity markets take that as a buy signal. But be very careful because the Federal Reserve change of language from pause to skip, I think is intentional to tell the market they do not want to see asset bubbles developing in equity markets as what we are seeing right now. So if they use a new language, I'm sure they are trying to telepath a new message to the market, telling them even if they pause, it is not a sign to buy up equities markets. So do watch out for this reaction here if the market, if the Federal Reserve actually pause, and worse, if they did not pause, they continue to hike interest rate by another 25 basis point. Everything that we see that has gone up may actually unravel. So do be very careful. So in the S&P, in the Dow Jones, what you are seeing in front of you is the 4 hours time frame, and it does suggest that last night we have a marginal high. For the month itself, we have 34,077.8, and it is already flirting with the my price range in which I think the market may attract some selling interest here. The bracket of prices which I'm looking at is 34,080 to 34,500. So right now we are just brushing at the bottom end of the range itself. Now, located within this range of prices are the the May high at 34,257, which is stacked just under the year high at 34,342.3. So taking all this into consideration, I think the market may actually have the incentive to take some profit off the table in the recent run up in prices. So if we do see such a scenario, the nearest support probably will be in the 33,400 range, and we will see how far this thing can go before the market picks up. Okay, over in the S&P 500 we are seeing similar things. Last night we have the S&P 500 rallying past the last August high of 4,325 to a high of 4,340, and again this level is very very close to my ideal range in which I believe they may actually attract selling parties here. The level is 44,260, 4,426 to 4,517. So do look out for some kind of reaction here, especially if the market do close and close below this support line here, represented by the dark black gradient line here. So if we have a close below this line, that will be the first confirmation that I see that the market may have peaked for the short term. Okay, so if that's the case, I think the market may actually go back and test the April low, which is located at 4,050. Over the Nasdaq, without emphasizing that the market has been led this year by the Nasdaq, and we can see the Nasdaq 100, we have yet another new high for the year at 14,789.6 overnight, and this is already very high because we have just taken out the April high not too long ago, the April 22 high not too long ago at 14,283. So right now the market looks like it's going to challenge the last March high at 15,265.4. So this is obviously a target which I think will be very crucial. If the market ever breach this level, don't talk about closing above this level, then it would change the technical outlook as far as I'm concerned, because that will take out the bias to the downside elimination. Okay, so basically do note that this 15,265.4 to me is very, very crucial. Cannot breach. Okay, if breach, then obviously the market will turn immediately positive. Okay. Over in Asia, we can see that Nikkei continuing to charge higher this morning. As of now, we have a new high for the year at 33,127, and this is getting very, very close to the 1990 June high of 33,345. Okay, the market may actually gun for this level, and we'll see what kind of reaction we get. And if it can sustain, well and good. If it cannot sustain, I think that it runs the risk of a pullback. And of course, if any pullback will be first supported by this pivot low here at 30,566. Over in Hong Kong, we can see that Hong Kong prices has been struggling, although it is attempting to take out the 19,521, which is a pivot point, which I mentioned many times over the last week itself. So the high traded this afternoon is at 19,511.8, did not quite touch this level. And if it cannot close above this line, then there is the risk that it may all unravel. And this time it will likely to break 18,000 to hit towards the 17,000 levels. Okay. Over in mainland China, we can see the CSI 300 has been struggling, and so far the market has been contained between 3,775 to the high of 3,867 thereabout. So unless the market break out of this range, it is likely to continue to consolidate. Even if it break out of this upper end of the range itself, above the market itself, 4,000 is going to be crucial. It must close back above 4,000 to have any real chance of rallying, failing which the market may actually come back down and take out the 3,780 level to head towards the last November low at 3,665. In energy markets, we can see that the West Texas Intermediate crude oil continue to slide, and yes, slide below the May 31st low, which was previously at $67.01. And last time we have a marginal low at $66.77. Now, the market seems to be stabilizing around this current range, and this range of prices is previously what I have mentioned, which may actually attract buying interest. That level is $66 to $67.85. Okay, if this level can hold, there's a very good chance it may actually extend higher in a three-wave corrective rally towards $78 or maybe a high as $80. So that remains my preferred count right now. Over in precious metals, we can also see that a precious metal has been struggling, but overnight we have a dip into this bracket of prices, which I deem to be very, very conducive for buying, and that level is $1,947 to $1,950. $3, and the market actually dip into this level to a low of 1,949.30 cents. And if this level can hold out, there is hope that the market will unbounce, continue to extend higher in a three-wave rally towards $1,990 or even to as high as $2,000. Okay, so this is a three-wave corrective rebound, and if the prices continue to be kept below this range of prices, it run the risk of another dip below 1,930. Okay. Over in silver market, although the market has been generally speaking more constructive than the rebound in gold, but I think the pattern do suggest that this three-wave rebound might actually find heavy resistance between $24.60 to $24.90. The high traded in last Friday was $24.53. So there's a very good chance after dipping yesterday to win the range of what I consider to be a good level to pick up some long position, which is $23.84 to $23.98. The market is probably looking for another rally beyond $24.53 into what I consider to be a target range, $24.60 to $24.90. Over in currency market, we can see that the dollar continued to consolidate with a bias to the downside. We can see that the high here is 104.62. The market may probably pulling back in a three-way corrective pullback towards a 102.5 or 103. So if the market do dip into this bracket of prices, look for buying signal here because I think the rally from 152 to 104.62 is by no means over. I think the market probably will gun higher towards the March high of 105.87. Over in the currency pair, we can see that the euro dollar is basically a mirror image of the dollar index. While the dollar looks like it may dip a little bit more, the euro dollar looks like it may actually rally a little bit higher beyond the 108, ideally into the 108.10 to 108.45 range before the market actually complete its three-wave rally here. And if this market cannot go beyond 108.60, then the market may actually unravel, and this time it have run the risk of actually breaking the 106 level towards the 105 much low. Okay, so this is, I think, that what the market is probably will do over the medium term. However, we can see that the reversal is very apparent in the table. Sterling versus dollar actually hit the ideal price of 126. Remember yesterday update, I did mention 126 is crucial, and the market came within one tick of that price range, and then it basically fall apart. So we can see there's a reversal here, okay, to a low of 124.87. So as we are speaking right now, the market is rebounding a little bit just before the London market opens. And if this rebound can extend into 125.45 to 125.60 level, that will present a selling opportunity for the continuation of this drop, possibly below 123, even towards the 122.75, which is the April low. Okay. Over in the Aussie market, I think the market may have already peaked at 0.6775 overnight, and it looks like it may extend lower. And I think right now I am thinking of looking to sell. My immediate target is 0.66. Over in dollar versus Canadian, we know that dollar CAC has actually fallen by far by the deepest margin relative to the other major currency pair, and it looks like it may have found a bottom at 133.13, and looks like the market now is getting ready to bounce. And if it can bounce from here onwards, I think my immediate target is 134.90 to 135.25. So this is my immediate target. So there is still a good, how long? Maybe another 200 points here that can be had. Okay. Over in dollar yen, I think this is a very different structure. The dollar yen is apparently consolidating. We're getting lower highs and higher lows, and it looks like it's starting to continue into a triangle. And if it's a triangle, always remember all triangle pattern have a 5-wave internal structure. We have A, B, C, D, E, and once E is done somewhere around 139, the market is getting ready to rally beyond 141. And if this actually pans out, the target for this move is possibly somewhere around 142.5. Okay, so look out for this extension here. Okay. In Bitcoin itself, we can see that the current drama surrounding the crypto space in terms of the SEC, which is the Security Commission, targeting both Binance and Coinbase, is causing a little bit of hoo-ha. And we can see that the market has been very volatile. We have a sharp drop of $2,000, a rebound of $2,000 before the market come back down and test the lower range. So in the near term, if we get any kind of bounce, I think the bounce would be quite limited. I think the market will have problem getting beyond the 27,400 range peak here. So I think somewhere between 26,900 800 to 27,400 is where I think the market may stabilize and maybe even turn back down. And if we see such a move below $25, $25,350, it may see Bitcoin going all the way down to test the 23,000 even levels. So this is my 2 cent my 2 cent worth of opinion. So this is what I have for you for today. I will give you another update tomorrow as to whether the CPI numbers coming up tonight is going to have a major impact. In the meantime, you take care. I'll see you tomorrow. Bye-bye.